Good morning, everybody. Happy Friday. We made it. It's Friday, and probably for a lot of us, the weekend can't come soon enough. I've been watching the market all morning, and it doesn't look great. We're going to talk about that. We're going to talk about Apple. We'll talk earnings, obviously. We'll talk all that stuff. But the overall market really is probably the story here because it's not looking great. We will talk about this also with our guest, Blue Putnam. He's our boy. He would join the show at 8:35 to talk about the macro environment right now. He is, of course, a chief economist at the CME Group. So make yourself feel better. Pour a nice, strong cup of coffee. Hit that like button, and we got this.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, guys. What's up, Joel? What's up, Dennis? How are we
Not
looking?
much, not
How we
much.
feeling?
Can we? You know what? In order to lighten up
Bearish.
the mood, we should have played "It's Friday, It's Friday." Remember that song?
I should have. You're
We
right.
should have played that.
I should
But
have.
we got to get back to the dad joke of the day. We need to lighten up the mood here.
Please.
This is an old one. Dads love trying to trick you into pulling their finger.
Yeah, for
Yeah.
sure.
The old, yeah.
You know what?
That's an oldie.
You know what?
Dennis is not amused.
No, nothing is amusing me this morning here, Joel. Nothing at all. This is a very, very bad tape. When you have Apple going up the expected move last night, showing strength, the market responding well last night, and then the futures traders just turn it around, start knocking it down. And when you have Apple showing that strength and the market just shrugging it off, saying, nope, we just don't want stocks, that is not a good sign.
Right, let me run things down. We had to close at 1775. We had that higher open because of Apple. It was just snuffed out in the double close area right there, 43.45 to split those closes. Crude up $1.11 at 87.72. Gold getting pounded down 860 at 1786.40. Silver going the same way. Down 22 cents at 22.46. Bitcoin hanging in there. That's up $705 at 36,260. Ethereum hanging in there as well, up 37.50 at 23.74. So, do we want to do good report, bad report, good report, bad report? How do we want to do it, Spencer? We'll let you lead the way.
I mean, we got to start with Apple, right? Because it is your leader, and companies like Apple, companies like Microsoft. We saw this with Microsoft. They have the power to take the market with them. Microsoft took the whole market with it the other day when it reported earnings.
Apple did too last night.
And Apple did too, because it was a really, really good report.
It was.
Let's get the chart up on the screen. The bottom line here on Apple is they came in above the estimate on everything. Earnings per share, revenue, every single segment beat. iPhone, services, other products, Mac, iPad, every segment came in above the estimate last night. The guidance was fine. They also were a little conservative as far as talking about the chip shortage. The struggles remain, but they say it's getting better. It was a great report.
Yeah.
It was a great report.
And the market rallied it. We went up the expected move on Apple. Joel, expected move worked like a charm here. A little bit over, maybe $8, $9. Expected move was $8, so kind of hung out. It originally went right to $8, and then it sold off about $3 in that original, like about half an hour after the report. But then we rallied back up, and we were hanging out for the most part up about 8, 8.5, right around the expected move. But they could not get it through the expected move. And then they started to leak it, and it's been leaking, and now the market's leaking, and now it's like, oh man. So I don't know. I own Apple, obviously long-term portfolio, holding on to it. But if I had it on for a trade, I'd sell it. on a good report.
You know what's different about this is like the Microsoft had the wild session, but it was at the highs at the open, right? It was right at that 308 308 area. This is a little bit different because now, because of that market factors, you're off. You're off about $6. $5 off that high. It's going to be hard to get back over 168. I mean, unless you just, unless the spoos just get crazy, get back into 4,300, which, anything is possible in this market, folks. Well, what we've seen today and this week, I mean, you can't rule anything out.
Yeah.
Inside day yesterday, so I'm just going to go simple. Let's just get through yesterday's high. Let's do a gut check here. Let's forget about the earnings. We see the 63.84 high, and I believe there's another high right in that area. Let's just go at 64. If this is going to be Apple's day, if people are going to react to the earnings like they should, we're going to barrel through this 164. That's a pair of highs, and then go up and test the pre-market high. Coming back on the downside, better hold the close. That's all I have to say. 159.22. Actually, that's a triple close area. 59.78, 59.69, 59.22. So there's your range. There's your potential range in Apple.
And just to be clear, on Apple doesn't issue guidance. They haven't given guidance in a couple of years. But as far as the forward-looking statements, they did say that the supply chain problems were getting better. So that's why
all good news.
Yeah,
all good news.
It was good. It was good.
There was nothing on that report that was bad, and the stock was up, rightfully so. Went to the expected move like they usually do. This market, the tape is just terrible. And it's very concerning. I know there's people who want to buy. They're still licking their chops, buying the dips. I bought a few dips in the longer-term portfolio. But again, those appear now to be mistakes because we have hung. Here's the overall problem with the market. We'll get to Robinhood. We'll get to the other earnings here in a second. But the overall problem is we've hung out here too long. We made 3 days with the range about the same. What you often see is you go down, you bounce a bet, and if it's going to start, and then it consolidates. And then you want to see it resolve higher if you think the bounce is over. But we feel like we're resolving lower. So now what I would say is you take the original move, which was a drop by about 40, 40 SPY points, Joel. So about 400 S&P points. And you knock that off from where we currently are. And that's where I think we're heading. So I think we're heading to that 400 SPY area, 390, 400.
Wow.
So which would bring us down, another 300-400 points from here. And then maybe we reevaluate at that point. So I think you are not buying the dip here today. It's just hung out here too long. We just didn't bounce out of the area. And if you've got trades on that, you want to get out of, I think you may even need to sell it in the hole today. I don't know if maybe we're going to get bounced. I mean, we always seem to bounce back. But you got to use those rips to get out. Just like I was tweeting last night, it was that you could feel it that if there was a bounce, you should be lightening up. And I tweeted out last night another nice selling opportunity, and it was last night. And here we are. I think we're going to retest those lows, and I think we might even do it today on the S&P, which is the 420.
Dennis, do you know what the ultimate irony of this is? I'm not going to ask Joel because Joel knows the answer, but I'm going to ask you. Do you know what happened 1 year ago today?
Meme stocks topped out.
GameStop to 483.
That's it. Where's GameStop now?
93.
Wow. I think GameStop is going a hell of a lot lower. AMC, I had my price target at 10 when it was 50. It's 14. Stick with my price target at 10. I don't know. I mean, all this stuff. I mean, those were predictable that those stocks were going to come down. It's just everything else now. It's like... And Joel, I know you're kind of quiet back there, but I mean,
we were sick to our stomach, man. Last year when this was going on, and it was
it didn't make any sense.
It's since sliced bread. We were just thinking, man, this is such a bad thing. People are getting the wrong notions.
Yeah, you suckered in so many people.
I felt bad. I felt horrible.
And you kind of knew it was going to end badly. You just didn't know when.
Yeah.
And now it's like, okay, it has. And I mean, they're still holding. A lot of these people are still holding. They're still believing there's going to be a short squeeze. And you know what? It's had a lot of short squeezes, and it's going to have another one. But the short squeeze is going to be like from 12 to 13 to 15 on AMC. I don't think you're getting back to 40, 50. In this market, we can never say never because it's proven that before. But I don't think you're getting back to $40, $50, $60 because fundamentals, this is a fundamental market. It's being driven on. It's the CFAs are winning here now. You got to do your analysis. Even value stocks, so right now, they just don't want to buy anything. Like this day is ugly. I'm looking at what is up today. I see Apple up
What
slightly
else?
now, not nearly as much.
And
I see Visa up because it reported. I see a couple Apple suppliers up because of Apple. And that's it. I mean, we've been talking about the consumer staples not being a place to hide. Well, today they're breaking down. And I think if you are concerned about this market, you should not be hiding in consumer staples. You should be hiding in US dollars, not Bitcoin, not crypto, because that's all going down too, in my opinion. Like I said it a little bit while ago, but it's not out of the realm of possibility that Bitcoin could see 10,000 again. I think you got to be selling into strength on all of this stuff because we're in a revaluation of risk here, and there's so many bag holders now. Like we are replaying 2000. We are replaying, and we're 6 months, a year into it, where they've hammered all the growth stuff, and now they're going to start coming for everything. And I don't know if maybe it's going to turn around on a dime. Maybe the Fed's going to defend this market. Maybe the Fed's, if it really starts to get ugly, will start getting more dovish in their talking, and then that'll turn the market around. And I'm not saying we're going into this full, we're going to fall 40, 50, 60% on the S&P. The stocks just, aren't valued like they were back in 2000, where it could have a fall like that. But could we go down another 10% from here on the S&P, and could we get cut in half on all those growth names again? I think we could. So I nibbled my toe in Square at 106. It looks like a mistake.
Yeah.
I nibbled my toe into a few things. They all look like mistakes. This is the type of market. It's what a bear market feels like. You buy something in your long-term portfolio. A week later, you regret it. Even if you get the bounce, that's what this market is. It's instant. It's not instant remorse, but it's pretty quick remorse when you're buying stocks.
If you are wondering, how to hide in cash, well, you can always just hold cash in your account. Or there are instruments like the UUP, which is an ETF that invests in U.S. dollar and shorts other currencies against it. UUP is at its highest level since last summer right now.
They always fly into the U.S. dollar when you have weakness. 2008 was the same thing. We were at par with Canadian dollar, and the U.S. dollar exploded. They always go into the U.S. dollar when you have fear. It's the world currency that they fly into. I'm sorry, Bitcoin is not. It's the U.S. dollars. When you really, really get into trouble, people start going into U.S. dollars. So it's not surprising that UUP is breaking out. And that's not a good sign for the market either, Joel.
No, not at all.
It's
that
not
hurts
a good
a
sign.
lot
It's
of
telling you
companies.
that people are scared.
That hurts.
Let's go to the Robinhood earnings. We'll give some
boy.
bad news off the bat, and then we'll give some good news in our opinion, because it's down significantly. Let's talk. We knew the report was probably going to be bad because you can just the clientele and all that
trading
growthy stuff.
Yep.
Crypto, all the stuff that's been hammered is where the clients are. So it's predictable that they probably weren't going to get the trading volumes that they'd like.
Yeah, so here are the numbers. The fourth quarter earnings per share, they lost 49 cents per share, which was a little bit below the estimate. Sales came in below. Actually, sales was a little bit higher as well. But Q1 sales guidance for the current quarter, they said it'll be less than $340 million versus a $448 million estimate. I want to bring up some charts here that kind of tell the story. I pulled from a variety of sources. First, this is from the block. This is crypto as a share of Robinhood's transaction revenue. Recall when they added Dogecoin to the platform. What was it? It was Q2 of last year. That was it. People were literally flocking to Robinhood just to trade Dogecoin.
Everybody.
So that's come off its high. Okay. This is adjusted EBITDA going in the wrong direction, right? Going from positive to negative. Not a great sign. Net funded accounts. Look at the growth. It's
not happening.
Where is it? It's not. There's
no
none.
growth.
Okay.
It's going to start declining.
Yeah.
Look at the AUM. Look at the assets under management. Again, where's the growth?
It's even lower than that now.
It's not. Well,
there's no growth.
Look at the average revenue per user. Again, wrong.
Dropping because they're not trading.
Wrong.
They're all stuck. They've lost their money and they're just sitting bag
all
holding.
These charts, and this is from their presentation. They've got to. They've got to be transparent about this stuff. So this is the bad news. Right?
Yeah.
I mean, all of this is the bad news.
Yeah.
And we'll look at the stock chart now. There it is. You can see it at $10.
That's bad news too.
Right, that's bad news too.
What's the good news?
There is
the
there
good
is
news is I
a
agree.
silver lining.
Yeah. Well, you've reached 10, which was predictable. I mean, when it's coming down, it's like it's come this far. It's going to get under 10. Hit the whoever stopped is sitting under 10. They'll want to get it under 10 the regular session to hit the stops probably. Does it bounce that 975, 980 or it might? I don't know the path here. I do believe that Robinhood will get taken over by somebody eventually. I do believe that. It's not getting taken over at $20 though. And the problem is if it continues to leak, and let's say it gets down to $6, $7, $5, five, lower, then it gets taken over at 7. Are you happy about it at 10? So coming in a stock, I agree with Kramer. Just buying a stock because it's a takeover candidate is really a bad investment sometimes. Because here you are, you have a company that's really not firing on any cylinders anymore. All the growth that they had from stimulus, people funding accounts, people sitting at home, trading. All of those stocks, the story stocks we know, have been destroyed. So you probably have a majority of Robinhood customers that are sitting bag holding stocks, and they're not going to be trading if they're just sitting holding the capital in these losers. They don't have the capital, just turn over and buy something else. So that's the problem, is that the client base is all the same types of stocks. There's some good, don't kid yourself, very good traders in Robinhood as well. And there's not everybody, but I'm saying a lot of Robinhood traders probably own GME, probably own AMC. Some of them probably own crypto. Some of them probably own Dogecoin. The stuff's not coming back. So those customers are going to, not be trading as much because they simply got their capital tied up in those stocks that probably aren't coming back. I do believe that if you're looking at this and saying, man, if you're one of the big brokers, and what's the market cap on Robinhood now?
10.
It's a drop in the bucket for one of the big guys to come in and buy it.
10.
So I think it could get bought. I do think Robinhood probably gets taken out at some point in time. I'm not sure I want to be the hero and say this is that time, though. Maybe the brokers are saying, why do I want to do it now? Why don't I wait until, it really gets ugly and I can really get it cheap? Maybe it is already.
Right. No, and so that's the idea, right? Maybe not now, but maybe in a few months if it's at
I think so.
$6 billion or $5 billion, right? There's something to that. And here's the bottom line on Robinhood, right? Those numbers that we just showed are not great, but this is what really matters here. And this is for if you're a big broker, you're a big bank, all you care about is AUM and number of accounts, right? So Robinhood's got those in spades. They got 22 million funded, almost 23 million funded accounts. They have almost $100 million in AUM. That's not nothing. If you're a JP Morgan or if you're a Vanguard or somebody,
it'd be nice to get those customers.
It would be great to get those customers.
Yeah.
Well, what are you going to do with those customers? Are you going to hold their hands?
Well, they're young customers, Joel, though. You've got to consider one thing. For all these Robinhood traders, there's probably a lot that aren't going to make it, but there's going to be some whales that come out of there, too. There's going to be some excellent, big investors coming from Robinhood that you eventually get your hands on, too. So you can't just say, oh, they're all AMC and they're all going to zero.
Okay.
That's not the case. There's a lot of really good traders in Robinhood, too. So there is going to be some whales in there as well. I'm with you, Spencer. I think one of the big guns looks at this and does eventually buy it. I don't want to be the person catching the falling knife. I'll go with my fundamental thesis that when a stock is making a new all-time low, you got to go. You can't be owning stocks making new all-time lows because new all-time lows beget more new all-time lows. And you could have given this same conversation at 20, and now we're at 10. And a 20 takeover is off the table. You'd be happy to get 15 right now. So, I mean, you look here and you think, it could continue to leak. The company's just not firing on any cylinders right now. If I'm the big guns, maybe I'm waiting, or maybe you think you want to get there before somebody else gets there. But I do believe it's going to get bought. I just don't want to be too early.
I mean, Patrick PK just made a thing about, the whales not staying, with the platform. I mean, you could get commission-free trading at other places, right? And you could get a lot better execution.
Everybody's got it.
Yeah. So I don't know what, the they're going to have to convert. The whales are going to convert to different platforms. I don't think they're going to stay there,
Well,
because
yeah,
if they
but they
got
can
the money.
naturally, the natural conversion of them is easy. I mean, if you're within, let's just say a Schwab came and bought them, you know, you're within the
gosh.
Schwab family now.
Can you even imagine just converting half of those users to a long-term S&P 500 fund, and you have them forever? You have them
You have
You
forever.
want
all
to
the
talk
young.
about the last firm that would buy them would be Schwab.
Why?
Schwab just bought TDA. They wouldn't. I don't think.
Because Schwab's going the opposite direction. They
No.
they want more sophisticated investors.
These people become sophisticated investors, though, Joel. I mean, this is the future. You're buying a bunch of accounts with 20-year-olds in there. Those 20-year-olds will eventually 30 and 40, and they're eventually going to have money, most of these people, in one way or another.
Exactly.
So I think
Okay.
that at a certain point in time, if it got down to a $5 billion market cap, it's too easy to just scoop up and and convert those customers. Is 10 billion cheap enough? I don't know that. I'd say 5 billion is for sure. If Robinhood's at 5, I think I'm backing up the truck and loading it. Somebody asked me this when it was at 14. They're like, getting taken out. I think it does. And I said, I think I would wait though. Now I'm glad I waited. It's 10. Am I coming here at 10 today? I think it's a tough call, because the tape, like, let's bring it back to the broad market. We're in this horrible market right now. We really are. I mean, you know, we can bring up ARKK, and it's been a good indicator for what's been happening overall, and it's led us on the decline. And I mean, we're going to challenge the low of the move again here today. All of the stocks in there, I mean, Zoom, you can say, oh yeah, it's trading 40 times earnings all you want, but I get those emails. Do you get the emails from Zoom to upgrade? Or maybe you guys already had but I get this email. Literally, if I look here in my junk, because my junk's picking it up, from Zoom Video Communications, I got so on January 6th, they sent me an email, gift from Zoom, upgrade to Pro today and save 25%. 5 days later, increased savings. Offer ends at the end of the month, but now you get 30% off. Then 7 days later, another email from Zoom. Limited time offer, 30% off. Don't ditch the 40-minute limit. And then again yesterday. So I'm getting it once a week. I'm getting spam from Zoom because I have a free Zoom account. I'm getting spammed in my email. My junk's picking up. Thank you, junk. But, you know, if you own these stocks and this is your growth engine, how many growth stocks got a discount 30-40% to get you to upgrade? You know, it's when you've got to start offering significant discounts and it's supposed to be a growth company, those are not the kind of growth companies you want. So you can say, oh, it's trading cheap relative to where it was, sure. But, you know, we've got competition everywhere. I mean, even on this show, like we said 6 months ago, we stopped using Zoom. We now use StreamYard. We feel like it's better. There's a bazillion of these things. So until they come out with something else,
new product,
their revenues could actually start declining. Those earnings could potentially start declining. So then where are you on this multiple basis? Somebody was an analyst on CNBC the other day saying, oh, it's just cheap. Well, yeah, cheap relative to itself where it was, but you're in a declining business right now, or a business that's definitely not growing. I wouldn't be getting these emails if it was. So we can say 136, how it can go wrong. Tell you how you can go wrong. If the revenue continues to decline and competition continues to come, this will be a sub $100 stock. So I'm not going to be a hero and say that this is the bottom, especially when I'm getting these emails.
First off, Dennis, I thought you treat your entire email like one large junk folder. I didn't realize.
Pretty much, because I don't read them.
I didn't realize that you actually looked at your emails. So this is
sometimes
this is news to me. And the second thing I'll add, and Anthony suggests Fidelity, just to go back to the Hood thing. Yeah, there's a play here. We just don't know where, we don't know when, and we don't know how.
Yeah, I mean, you can speculate all you want, right? And if you buy it here, I mean, there's all I can say, there's a little buying interest. Like someone's bringing this stock in around 10. You had the spike low to 977. And then a bunch of others. So someone's
holding where it should.
Yeah. Someone's double digits. Yeah, sure. I mean, someone's there. I don't see this. Anything can happen. But I
wouldn't short it here.
No,
I wouldn't go short now, Robinhood. The easy on all these growth names. The easy money's been made shorting these things. The people who have the guts to come in and short all the story stocks are the ones making all the money. So the easy money's been made on the short side on a lot of these things. Even shorting Kathy Wood at this point in time. I mean, it's fallen. ARKK is down 30%. We're not even through January. It's almost down 30% this year. I mean, what do you want? That's a huge move. That's indicative of a crash in 3 weeks, really, for her name stocks. So, I mean, Do you come and buy ARK now though? It's still not cheap, so I'm still not coming in. If I put that value area in, and looking at all her stocks, and you break down into the holdings and stuff, and I mean Tesla is still not cheap at all. It's still the biggest holding, breaking down to new lows again. It sounds like I still, when I open up the hood, pun kind of intended, under ARK, you see Tesla, you see a bunch of growthy storied stocks stories, and you see all these stocks making new all-time lows. So a lot of them making new all-time lows, not Tesla, but a lot of stocks making new all-time lows that she's holding, or at least 52-week lows. It's hard to just call the bottom in something like that. So at a certain point in time, will ARKK be a buy? Maybe, but it's not. Nothing in her
We've been
whole
saying that for
portfolio
a
is
month.
cheap.
We've been saying that for a couple months.
Well, no, we've been saying
Well,
it
I
for a
mean,
year.
you're like, there's
I've been saying it for 2 years. I was way early. I'll tell you right now, I was way early. I was like, none of this makes any sense. But you know what? I didn't get burned in it because it didn't make sense. I didn't make the money like maybe some other people did on the way up. So, maybe I missed out, but at least I'm not getting burned on the way down in all those stocks. Because a lot of stuff just doesn't make any sense at these valuations. I don't know what our analysts are doing, but I tell you, you can say, oh yeah, they're going to grow into these earnings and they're all value stocks. They're not. I mean, they're not, it's just not the case. She's wrong, and the market's proving her wrong.
And it's also just
or she's early, huh?
She was very early. She was very early on everything, and she was paid. She did great for a long time. Give her props.
She's still early, is what I'm
2017 ARK was $19, and it drove to 170. I mean, she outperformed this market driven by Tesla. Well, that pun was intended, but totally driven by Tesla. But I mean, she was, on it, and everything went, and everybody believed, and anything she would buy, like how much alpha was generated just from her buying the stock. I mean, she would buy something and then it would go up 20% the next day.
She did so good that she did so well that even if you take the last year into account, her annualized returns have crushed the S&P. That's how good the last 5 years were. Even including last year, as bad as last year was. So,
but if you go to the last 3 years now, she's underperforming the S&P, and that takes away the big gain that she had, because we can see that chart of Berkshire Hathaway on top of ARKK, and Burke has now passed her in the last 3 years, and he's got the conservative, boring, Warren's washed up approach. Not so much, not so fast. Valuation works in the long run.
All right.
So, anyways, I'm not buying ARK today. I'm not buying ARK tomorrow.
Yeah. So someone asked, is Team still up? Yeah, Atlassian is up. It's basically your biggest gainer in the morning. Not your biggest, but your biggest one that is on my radar. You do have a couple of stocks in the green, but what is in the green, like Apple, is leaking, right? Atlassian had a great report. Team, but it's off its pre-market high now.
What's pre-market high? Bring up the chart on Team, Joel.
330, just over 330.
Now you're 306. You're giving half of it back already. This market is just selling rips. Selling rips. The selling the rip is working better than buy the dip ever did. That's how good selling the rip is working right now. That's how good it's working. I mean, you look at, even the Microsoft report, right to the expected move, you're selling that rip, or the Apple report last night, but Microsoft too. What about ServiceNow? They're on there. Oh, yeah, Kramer 550 yesterday morning.
Yeah.
Rah. ServiceNow. The guy gets on there with his cool glasses, saying, oh, yeah, we're the best. We're the best. That's what he's doing. That's what he says. He's so cocky, that CEO. Like, I know Kramer loves him, but he comes off very arrogant. Saying everybody needs service now. We're the coolest people in town.
Is that the guy? Is that the hippie they had on?
He's on lots of times. Kramer likes the ServiceNow guy, and maybe he's a really good guy, but he comes off very arrogant in his interview.
He kind of looked like Mick Jagger, didn't he?
Yeah.
Is that the guy I'm thinking of? Yeah.
But here you are, ServiceNow, Kramer, rah. This is the one he got on 550. It just gave half of it back. It just gave half of the move back in one day. So, is it going to give it all back? Probably. Great report, good stock, sell the rip, works again.
Yeah, and we talked about that one. You had, I kind of liked the five. What was this? There was 3 highs in a row at 545, and it did get through that. Made me look pretty bad when it went to 557. But man, when you get that many lows or not that many highs in the same area, I mean, yeah, shorting it when it went up through it, was a bad move. But it's one of those, things where it comes back down through it.
It seems like
it came
you're short
down
of stock.
pretty early.
even if you take heat, it feels like 3-4 days later you're starting to make money again. I mean, it's unbelievably consistent right now shorting stocks.
Visa, same story, right? Pre-market earnings pop, got up to 219, is off its highs now. It was a good report.
Major resistance at 220. That's a level of all levels. I don't think it's getting through there. Again, this is just the market. You don't buy the rip, you sell the rip. If you're buying the rip, you are absolutely doing it backwards and asking to lose money. 219, that's right where it should have stopped. Look at all the resistance at 220, Joel.
Yeah, right there.
If I was long Visa, I'd be selling it. I sold MasterCard after 13 years of holding it. I sold a big chunk of my MasterCard. That's how much I don't like this market. I even sold some of my Take-Two. I took some big gains just to try to get out of some of the stuff. And yes, I nibbled my toe on some GM, and yes, I nibbled my toe on some Square. It looks like those were mistakes.
Woo! We're rallying consumer spend. We got some numbers, Dennis. Be careful.
Another rally to sell.
Yeah. Keep those offers out there.
But you know what? It rips like more than you think.
We'll probably
go green. Everybody be like, oh yeah, we're back. We're buying the dip. And then they pull the rug out from under it again. Guilty until proven innocent, this market. Use the rallies to raise cash. That is how I'm approaching it again now. Yeah. Sorry, I mean, I tried to get bullish a few days ago. I tried, and you know what? I tried, but it's just been down here too long. We've been down here. We're not responding well enough to good reports. That Apple report really turned me. I mean, you look at the Apple, and here was a fantastic report. I don't know. I got to cancel all my orders here again because we're going to just rip higher.
Oh, take a little heat. Come on. You just said take a little heat.
It goes so much farther than you think. Like I was thinking the open yesterday. I'm like, oh man,
it goes way further than
it's just gonna roll over off the open, and I got rolled, off the open. It went up, went all the way into the, went up all the way 40 handles above the open.
No, I know the shorts is not that easy. Like it's not just like we're short. They give you a major heat. So, but still, that being said, I mean the Apple expected move right to it. So you just got to pick your points. You just can't go, this point in time. You got to pick your levels. Joel's levels combined with a bearish thesis right now is working. Core PC price index up. What the estimates were.
We just had a bunch of data points come out all at the same time. And so, you have PCE price index. You had personal the December personal spending, which fell. You have the employment cost index. A bunch of data points. It's probably all just, I don't want to call it noise, but that's what it is here. You know what? No, I don't want to insult economic data. We're about to have an economist up on the show in like 2 minutes, so I'm not going to insult economic data points before we bring Blue on. But
I need Blue.
We need Blue. Blue, are you ready? Should we bring Blue on now? Blue, are you ready?
Go ahead, bring him on.
Blue's ready. All right, let's bring on Blue Putnam, managing director and chief economist of the CME Group. And help us make sense of all this stuff. Blue, good morning.
Good morning.
How are we doing this morning?
Oh, we're doing pretty good. I'm not complaining.
Hey, we got someone that's not complaining on the show.
I like that.
Awesome. Okay, so I guess we'll just start with this. Have you gotten a chance to look at all those numbers that just hit 2 minutes ago? I to be honest, I'm not even super familiar with PCE and personal spending. I don't even really pay.
Well, personal spending was down, but we already knew retail sales were down in December, so there's no news there. The core wage rate is picking up a little bit, but there's no news there. The core inflation rate is high. There's no news there. So this all just basically is confirming what we already knew, that we've got inflation. Hello? How long does it take us to figure that out?
Apparently not too long, I think. So, all right, we have inflation. All right, so no news. That's the takeaway. No news from these data points this morning.
No surprises.
What about from Wednesday? Any surprises out of the Fed on Wednesday or
yeah, that's what I wanted to ask you, Blue, too. I mean, I thought he pretty much stayed the course.
He did stay the course. And, when we talked back in December after that meeting, I told you they were going to stay the course.
Yeah.
Here's the thing you got to know about the Fed. The Fed is data dependent. What does data dependent mean? It means that they're always behind the curve because it takes 5-6 months of data to develop a pattern that they have confidence in. So they were late to the inflation party, but they're late because they're data dependent and they're data dependent because they don't want to be a forecaster. And I can tell you, if they were a forecaster, they'd get a lot more things wrong. So I'm with them on this, but they're always going to be a little late. The other thing about the Fed is that they don't like to change course. So once they give such strong guidance and they know that they've got an issue, inflation, they don't want to like bounce around. They like to be consistent. And so what they've been telling us for a couple of months, they're going to do. And why that surprised the market, I don't know, but it did.
So what is your take, Blue, as far as like how the market perceives all that, though? Like we talk about like trust. Does the market trust the Fed? Do you think the market, or actually not do you think, like on a scale of like 1 to 10 or 0 to 100, how much does the market trust the Fed right now?
Oh, I'm going to give you a 5, which means that I don't know.
Okay.
The markets are cynical. Economists are cynical. Equity analysts are cynical. You guys are definitely in that camp.
Don't throw me in with them, all right?
I love
But, the Fed has a long history, and they do learn from what they perceive to have been their mistakes. And, back in the early 90s and under Greenspan, they didn't do much forward guidance. And markets kind of got a little more volatile sometimes. And so now they're into forward guidance and they really believe in it. By the way, forward guidance doesn't change the outcome. It just smooths out the reaction. If you're going to take away asset purchases, you're going to raise interest rates, there's going to be an impact on markets. But forward guidance helps just smooth that out. And that's what they like to do. And once they commit to it, that's what they're going to do.
But if you look at it, let's put a positive spin on it and say, we had the pandemic, the economy's strong, right? That's a good thing, right? Earnings are increasing, and having inflation just means that we have a strong economy. So I mean, in the long run, we get through this little bout of inflation, we fight it back. I mean, to me, like the big concern, the huge concern is that if they start raising and they start raising too fast, then is that going to, what's that going to do to the economy? So they're really in a pickle. But I mean, if you want to look at the positive end of things, hey, higher inflation means we have a strong economy. People are spending money. Isn't that a good thing?
It's definitely a good thing. And it means that the Federal Reserve appropriately should get back to a more neutral policy. By the way, I think a more neutral policy is healthy. Zero interest rates to me aren't very healthy. Asset purchases aren't that healthy. You only do those in emergency situations. That disturbs the whole price discovery process. It drives investors to search for yield and take more risk than they probably should. And then when you remove that, they get, you get equity volatility that hurts them. We're going to actually do fine. And by the way, taking interest rates from 0 to 1 over the course of the year, I mean, really.
Come on.
By the way, I think 1% is somewhere between 1 and 2 is a better long-term, short-term interest rate than 0, because like I said, 0 hurts retirees, it hurts money market funds, it hurts a lot of people. And, the Fed is appropriately getting out of that policy. So, I think it's going to be, the real issue for 2022 is that we don't have any fiscal stimulus anymore. And not that I'm advocating that, but we had massive fiscal stimulus in 2020 and 2021, and it's gone. And so we should expect that the economy in 2022 is going to grow a whole lot slower than it did during the rebound years. And that's natural. That's not something that worries me. But I think a lot of people haven't factored that in yet.
What about the Jamie Dimon, J.P. Morgan talking about 8 hikes? I mean, just give your perspective. I mean, 8 hikes, and this market's going to be back at the COVID lows. I mean, what's your opinion on that?
Well, there are two things there. There's the pace of the hikes, and then there's the terminal rate. The pace of the hikes is probably 25 basis points every other Fed meeting. So that's starting in March, and that's 4 for the year. They have done more in the past. Greenspan did a hike virtually every meeting. He did a 17-step progression into a recession. So they don't want to redo that from the 2006 episode. And Greenspan also back in the early 90s did a 50 basis point rate hike, and that didn't go over too well. So the Fed learned. So, every other meeting, quarter point, let's just take it appropriately slow. The terminal rate, I think they're headed to neutral policy. And what is neutral policy? That's putting the Fed funds rate right on top of their long-term inflation target. So 175 to 2 on Fed funds. So the Fed funds futures markets, they have 3 or 4 rate hikes this year and a couple more next year.
Yeah, and as you mentioned that, I want to bring up this table from the CME's website. This is a great tool. It's the CME Fed Watch tool, which just shows a visual representation of what the Fed funds futures market is saying. You just go to the probabilities tab right there, and here you are. So we're looking at a high likelihood, virtual certainty of a 25 basis point rate hike in March. You go out a few more months, and the probabilities get to be the Fed funds rate around 1% or even, above 1%. But any other takeaways you have from this table, Blue?
Well, I certainly love that table. I look at it every day.
Yeah.
Look at those probabilities. One thing I should tell you about futures markets, they represent current market sentiment. They're not the greatest forecasters. So, data, the Fed can slow down or speed up if it wants to, but I really think the Fed is really focused on inflation now because, if you're a central banker and inflation starts on your watch and stays high, your legacy is trash. Okay. It's toasted. Central bankers, they remember the Bundesbank. They remember the hyperinflation of the Germanys. Who was the worst central banker? We think it was probably Arthur Burns, first PhD economist to be chair of the Fed. He was there when the 70s inflation started. Who's the best former Fed chairman? The heroic. It's Paul Volcker. He gave us 20% interest rates, a recession, and he beat inflation. So inflation is so key to the legacy of the Fed. They understand that, and of course, high inflation for a long period of time really hurts the economy.
Blue, so we're getting a lot of questions here, and I know a lot depends on your time horizon in investing. But we have a higher interest rate environment. Like I said, it's good for people with fixed income, other segments of the economy. Do you just stay that just for a long? Let's say you're just not older like me, but a young. I think our demographic is probably let's say 20 to 45. I mean, do they just stay the course with equities? Do they, how do you handle this this rise? I mean, are stuff on sale here? Do you stick with value? What's just I'm not looking for individual picks, but how do you invest in this type of environment?
Well, okay. So what is really different from last year? Okay, and we have inflation. That's new. We have the Fed withdrawing restraint. Withdrawing accommodation, and we don't have the fiscal policy stimulus anymore. So what do you got to look at? You're going to have to look at what did well for those reasons, and then you probably don't want to own them in 2022. But the economy, like you said, it's going to settle down into a 2.5% growth path. That doesn't sound all that good, but it's actually fine. It's what we did in the last 10 years. It's a good growth path for an aging economy. The demographics are against us. So, the economy is going to be fine. So, and we know that if you hold equities for a long time, it tends to work out. There are a lot of people that are planning to panic and trying to figure out when to panic and all that timing. That's off the table. If you think you're going to live another 20 years, panic just shouldn't be there.
That's a good point. Never forget your time horizon. I always go back to that saying, time in the market is greater than timing the market, though the caveat to that is as long as you're diversified. Obviously, owning one stock is not going to necessarily do it for you. Blue Putnam, Managing Director and Chief Economist at the CME Group. Blue, is there anything any data points we need to be on the lookout for? I mean, we had GDP, was it yesterday now? I think it was yesterday. We have the Fed meeting in March. Anything we need to have on our radar here that could potentially change the narrative?
Well, you are going to have to watch earnings. Margins increased last year in quite a few companies. A lot of that is kind of an accounting fiction because when a company produces goods and services, they draw on their raw materials, they pay last year's wages, things like that, and those things are accounted at book value. So when we go into 2022, they're going to be paying higher wages and they're going to be buying the materials they need to make the goods and do whatever services they do at much higher prices. So, I'm looking for some degree of margin compression in 2022, and I'm worried that some of the analyst community have just extrapolated 2021 and don't understand really what happened. So I think we're going to watch earnings in the second quarter, third quarter, not necessarily right now. And we also have to realize that real GDP is definitely going to slow down, or probably going to slow down pretty dramatically in the first half of the year. We're losing the fiscal stimulus. We've got a little bit of a lag from Omicron. It's just going to, and the markets will think the Fed's going to change course, and maybe not.
All right, Blue Putnam from the CME Group. Blue, someone made a comment earlier, and it's been getting to me all segment here. Your bookshelf, is it stable? Is it okay? It looks a little bit. It looks like it's about to topple over on you.
That's the camera. The camera is one of those wide angle cameras. So the further things away they are, they tilt. So I'll try to get you a better background next time.
No,
we like it. No, we like it.
We like it. I just don't want it to topple over on you. All right.
Yeah.
Blue Putnam, CME Group, Chief Economist. Blue, it's always a pleasure to have you on. Thanks a lot.
Thank you.
All right. Hey, what a violent, that's the word.
Violent rallies.
Yeah. Violent reversal during that segment right there.
There's violent rallies in the bear markets. You get the worst, most violent rallies. And, then shorting is not easy. I mean, like selling the rip has been easy, but you're selling the whole, you're doing it backwards. So we just got a little ripper. Can we get up a little bit more? I think you get up to 433, 434, you're reinitiating shorts again. So again, I'm not changing what I just said. We've been in this trading range, and we got back up to 440. It's more of a layup, I guess, Joel. But I mean, you've had 3 days, same type of trading range, really 427, 428, 440. But it looked like it wanted to resolve itself to the downside yesterday. We get some economic data points, and that's starting to, okay, well, let's buy them here. Maybe inflation's not as bad as we thought, but I just think there's a lot of issues still here with this market, and I think you're using rallies to raise cash.
One thing I forgot, I know this is a little bit off topic, but I forgot to mention this earlier. On the Robinhood conference call, they did say, Dennis, this will interest you. Actually, this will interest both of you and everyone watching. Robinhood did say that they are going to extend trading hours on their app. So right now you can only buy it, I think, at 9 a.m. They're going to extend hours to earlier in the pre-market and later after hours.
Oh yeah, well that's good. I mean, give them the options. The only problem with the pre-market and after hours again is like it's so thin, and there's so many traders that come out and they're like, "Oh, I just want to buy this stock." Remember, at like 7 o'clock in the morning or 6 o'clock in the morning, a lot of stocks don't even have offers yet. So you could end up paying, up $10
4
or
a.m.
something.
move.
The 4 a.m. moves are crazy. There's no bids and offers out there yet. There's no market makers out there. So sometimes, you're like, oh, I want to get out. And sometimes you sell at a really, really bad price. So I've always, you never want to just be hitting the bid or lifting the offer, unless it's out to lunch. But it's, informed traders rock the 4 a.m., 5 a.m. If you don't know all the news and you're just blindly going in and putting orders out there, you're likely going to lose a lot of money.
It's good. You know who that's good for? When does that start? Can I buy some triple D calls?
Yeah. But I don't get up at 4 in the morning anymore.
You might.
I might start.
Yeah, you're gonna be out there.
Yeah.
What are they? They're gonna be like, who do I just trade against? Yeah, we haven't gone over your nicknames for the pre-market traders in a while.
Oh, is there any new nicknames? Is there handler? They don't see them as much anymore. That handler was brutal. So what they would do, there was an algorithm. This was years ago. I don't see it as much out there now, but it would always just offer. So if the stock closed at like $50.25, they'll offer it at $51.25. They're hoping you don't look at the handle. I bought the wrong handle. They always would. And if the stock price, even during the day, you would see it back at like if I go back 12, 13 years ago, or even 15 years ago, when algorithms were just starting, there was like this automated program that would always stay a handle away. So if the stock ticked down to 2050, it would go 2150. And it's just hoping you accidentally lift it. And, oh, it's the wrong handle. And then you get burned for $1. Dirty, dirty, dirty program. That's
the penny
Wall
jumper.
Street. A lot of dirty traders out there.
Also,
it's legal.
It was legal, but it's dirty as hell. You want to punch that guy in the face. I'd accidentally do it sometime. I'm like, I want to punch that handler algorithm in the face, the person behind that. Like, oh my gosh, I just bought the wrong handle. You're looking 24, 23, it's ticking. And then they can put the other handle on you. I screwed it up a few times. Back in the day, you could call and bust it, though. And I would call right away when I screwed it up. I'd call down, I'd call ready, send Goldman broker to the floor, or send, or just call the other side. So I'd say, bust that trade. And they go like it was a bust or a just. And, sometimes they'd offer you something like, no, take it to ruling. And then on the floor, they'd rule, yeah,
we used to
it's the wrong handle, but now it's like clearly erroneous rules and stuff. All those trades would stand.
Yeah. Just a quick reference point here for, because you see the wild action and everything. We talked about, the importance of your daily highs and lows. I talked to you about that 164 level. On that bump, where did Apple go? Just over 164. Respect your daily highs and lows. Sure, you want to see this at 168 today, but first things first, take a look at your levels, 164. Also with the S&Ps, it didn't go green for very long. So 1775 is the low close of the move, of this recent move. We just got a little blip to 2250 there. But, if you want to buy today, it's buy the dip. You think we're going back to, 4,400, 4,410 today, see if you can get green. And hold green, hold the close. You're almost better off trying to wait and see if it can hold a level than just blindly, okay, this, I like this low. Sometimes it's better to wait. So the Spoosh just got up to 1770. They got through that level a little bit. Let's see what holds again. It's a whole different story, once the liquidity comes in, right? They pounded this thing at 66 and a quarter.
Yeah.
We're hiding under our desk waiting for that 42.1275 to fall. And, now it's like looking like a great day. Look at that. We're 50 handles off the low.
We've come back. We're starting to leak here a little bit again. We go right to flat. Screw a few people. We're green. And then they pull
oh man, there's the mark. Get those orders out there.
I mean, nobody knows anything again. What I say 20 minutes ago might be different from how I'm trading 2 hours from now. The market will give me more information. The market is constantly giving you information.
A lot
of
how
you process and digest that as a trader. So you've got to be you got to be always processing all that information, using the tape and looking at all these different things. But right now, my overall long-term cap says sell rallies. That's what my long-term cap. The short-term day trading cap is buying dips and selling rips all day forever. It was doing that 2 years ago, it was doing that 5 years ago, it was doing that 10 years ago. It's what it does. It's trying to take advantage of intraday chop. That's what the short-term trading hat does. So when I'm talking like I'm selling stocks, I'm talking to you long-term investors, because on this show, we wear a bunch of different hats.
Exactly.
And, again, if you go as long as blue, am I selling my SPY? Am I selling my Qs? No, I did sell a little bit of Qs, but for the most part, I'm staying still 60-some% invested, 65% invested in this market right now. If I thought, the shit was hitting the fan and we were tanking 50%, I'd go all cash. I don't think that's the case. But I also don't think I want to come in here and use my dry powder right now after 3-4 days in the same range, because it feels like it wants to resolve to the downside. That's how it feels to me. I might be wrong. Feel can be wrong. But doesn't it feel kind of like it's been down here too long, Joel? Don't you kind of feel like, we've been, I don't know.
You got a bunch of lows. I mean, you got a line in the sand, right? And it's been this is going to be the fourth time. If we hold today, this is the fourth time it's been defended, right? If those lows hold up today. And what have we seen in this market time and time again? It's like you have a pretty good sell-off from the high. Everyone gets leaning one way, and then boom, it rallies. But it just that Monday's low. And I talked about it a couple weeks ago, actually, before I went on vacation. I looked at the weekly low, and I had talked to a couple people, and I think that weekly low was like 46.72 or something. I said, we take out the weekly low, then there's nowhere to go. We're still almost 100 handles off that weekly low. It's going to take, what can it happen? Yes, but I'm trying to be positive here.
I want to answer this question.
Sure. What's the question?
I imagine we will all have different answers, which is not going to help. But Jeremy Goldstein, what advice do you have for a new investor who is all cash? This is an interesting one.
I deploy some of it.
Yeah.
I don't want to be all cash right now. I wouldn't want to be, especially your age. I mean, okay, if you're 65 years old, it's a different story. How old are you?
Jeremy, I don't know how
he looks pretty
like
young.
What age group? You don't have to tell us your actual age,
young.
but are you like 20? Are you 40?
I'd say
you 80?
25.
No, I think you want to deploy. I think you're buying. If
I
put my long-term cap on, I'm buying some stocks. If I had all cash, I'm 65% invested. I'm bearish right now, so I'm still 65% invested. So it's telling you, if you're all cash, I'm putting some capital to work. Now, if you're a trader and you're a day trader, maybe it's a different story.
Jeremy says he's 42. So all right. So you have a little bit less time, but still relatively young.
I think you're buying some stocks. I think you're looking, at some beat up names. Like I said, I nibbled a little bit of Square in my long-term time horizon. 20, looking at it 20 years from now, I think Square is going to be there. Somebody's saying Shopify. I love Shopify. I want to buy Shopify. Somebody said it has a P of 30. I don't think that's correct. I don't think that's correct.
Shopify has it has a trailing PE of, actually it's less. Oh no, that's the wrong ticker. Stupid.
Right.
No, it's got a trailing PE of 30. That's the difference. The trailing PE.
What? It might have just been a one-time event, one-time earning or something.
Right. Trailing PE is going off last year. Right. The forward PE is what we care about, because we care about future earnings.
What's the forward PE on Shopify?
158.
158. So obviously there was something in there. It didn't just all of a sudden wasn't a value stock last year. 158 sounds right to me. So don't just take whatever you got and you see the P. Do your research. Maybe there's a one-time item. Maybe there was a sale. Maybe there was something in there. But if Shopify had a P of 30, I would be backing up the truck right now. If it really had a PE.
There's a big difference between PE and forward PE. We invest so we can get future earnings.
Vegas 124. I mean,
yesterday's earnings are not important.
If the Shopify PE was 30, it would be the biggest investment in my portfolio right now. I love Shopify. I would love it to come down to a PE of 30, but it's 150 something or whatever. 158 is what somebody else is saying, on a forward basis. But I mean, I don't know why that's showing that. I don't even know why it is ever showing 30, because it wasn't trading 30 times last year's earnings. So something's wrong there. Must have been like a sale, or it must have been something that happened there. It was never there. So, I mean, it's come down a lot, but it's still trading 100 times earnings. So let's cut it in half one more time, and then it starts to become more of a value name. So that's what I would say is, if I'm trading Shopify, if I'm trying to invest in Shopify, I want some type of, value. Because the story mattered in 2020. It doesn't matter now. It's valuation.
And people are asking in the chat, yes, Microsoft does have a PE of 33, forward PE of 33. Microsoft is
but it's not growing like Shopify.
But it's also Microsoft.
That's why I'm saying if Shopify, again, compare apples to oranges, Microsoft is growing still nicely, but not like Shopify is just exploding. Shopify is an awesome company. I just can't pay 100 times earnings for something in this environment. That's all. I would love to own Shopify at a PE of 50 even. I would buy it if it was, so let's cut it in half one more time to 400. I'll back up the truck, and it'll be the biggest investment in my long-term portfolio. If Shopify comes down to $400, unless something really happens with the company fundamental, if they cut it in half one more time, I will load the boat on Shopify. But I'm not loading the boat at a P of 100.
Just to be clear, there's people are criticizing a forward PE. There's no such thing as a perfect metric, okay? Every metric has its flaws. Forward PE has its flaws. Yes.
We don't know. Those are projections.
It is based on projections. We don't actually know. But the idea, yes, you can nitpick any ratio, anything on the balance sheet, and you can nitpick it. There's no such thing as the one number that will rule them all. Price is the number that rules them all, right?
I love Shopify.
That's the one that matters.
I love Shopify, but I don't love the stock yet. It's just not cheap enough. But could it grow into that? It could. I mean, if you're buying at 800 today, does it eventually have a PE of 40 or 50 because they've grown the earnings enough? I think eventually it might. So maybe if you're nibbling in Shopify, maybe you're going to be okay with a 20-year time horizon on Shopify. At 500, I think you'd really be okay. So I'd love it to get cut in half again, and then I would load up. If you nibbled in here, am I going to smack your fingers and say that's a dumb investment? No, I won't. But I'm not paying 100 times earnings in this environment.
We all know the real reason you love Shopify. It's because they're Canadian. I mean, yeah. He's not. See, he didn't even deny.
No,
it.
for sure.
He didn't even deny.
No, I was reading the chat. There'd be me heat again.
Oh, all right.
No,
chat,
for
baby.
real.
All right, listen, it was a fun show today,
do
guys.
like it as Canadian.
I'm going to hop over to Pre-Market Prep Plus and cover all these tickers we missed. So Triple D, go get them, and I'll talk to you after the open. Everyone have a good day.
PreMarketPrep.com for that. We're going to hop off as well.
We've rallied all the way back up. I mean, just selling rips, buying dips until further notice. Long-term investing, if you're 100% cash, you're nibbling your toes in here, yes. I think we got more downside? Yes, I do. Do I think the S&P the SPY is going to 400? Yes, I do. I think the SPY is going down to 400 eventually. That's just my thoughts.
Let's bring Money Mitch on here. I also have to hop because I got to get ready for our next show, our All Access show. This was probably my favorite show that we've done in a while. I thought was a fantastic show. Money Mitch, come on down here, and I want you to share your charts for us if you can. And I want to know what your take on today is.
What's going on? How we doing out there? Let's go ahead. Let's get to it. I'll share my screen right now.
Yeah, this was a great discussion today. I want to know where your head's at, and then I got to hop.
All right, let's go ahead. Let's take a look here. So the SPY is going to be all about 428. Why is that so important? Because the monthly chart, guys, the monthly lows here playing into, and you can look back there. That's the October low, the September low. Do we take out those lows now? If we do take out those lows on the downside, I do think that we're going to get a significant move down towards, let's say, the 400. We did do a 23.6% retracement here on the SPY, but the question is, do we break it today? You see how we're right on that 428 level right now. That's what I'm going to be watching this morning. If we break through that 428 on the downside, I'm going to be trading short. Above 442s is where I'd be looking for longs. We got a little pop right into this kind of a little bit here. We started pushing on up. Haven't been able to hold up there around the 442s. Really, 450s gets us really bullish. But for right now, we're going to look at that 442. Why? Because we look at the hourly and we see multiple resistance there. The question is, do we take out the 428 today on the downside? All right, time to catch up with the chat out there. What's going on out there, guys? All right, just give me 1 second here, guys. All right, there, guys. Sorry about that. I was hearing Rohan in my ears. That was a little bit weird. All right, let's go ahead. Let's keep going there. Let's smash up that like. Get that like on up. Easy Money in the house. Shannon in the house. What's up out there? Slow back, Eric. How we doing out there? Hex, JD. Throw up those stocks, guys. You guys want some stocks covered? Throw them on up. Sorry about that. All right, let's get some music going. Let's party on out into the open here. Thoughts on Roblox being mentioned. All right, let's go ahead and take a look there. All right, so Roblox has been coming down, and it's going to continue to come down in my eyes. I was calling this out when it first started breaking down in the 100s. Some people weren't thinking that it was going to keep coming down. I think this is going to go down always below the IPOs. I've been talking about you stay away from the IPOs right now, guys. Look at Coin. Look at Hood. Look at all these IPOs. These IPOs are not going anywhere. Be careful with IPOs. If you learned what got hit the hardest on the .com era, it was those new IPOs. All right, time to go through some stocks in the chat. If you guys got one you guys are taking a look at for the upside, definitely go ahead and do it. But Roblox, no for me. Just like the payment stocks. A chart like this, I am not trying to buy, guys. I know that a lot of people are trying to call Square to the bottom. They're trying to call PayPal to the bottom. They're trying to call Visa to the bottom. I am staying away from these guys. I'm not going to go ahead and jump into any of these until the market changes its environment. Let's go ahead. Andreas, how we doing out there? All right. Got goaded. Let's make some money. KO, says Martin. So just to kind of mention Defensives didn't do that bad yesterday. You can see this kind of closed on the harm me. This could break 59 on the downside, but look at PG or something like this. That's what I'd be watching. If it breaks 158, 156 on the downside, you could see a turnaround from value. We'll see what happens today to see if consumer defensives are up. As you can see, consumer defensives, this is my sector analysis. It needs to get back above in this area so that we can see these defensives stay strong. Apple being mentioned. Apple is one that I'm definitely keeping an eye out. I actually shorted this yesterday, guys. What were the important levels to watch? All right. So we're going to go ahead and delete some of this so that you guys can see what important levels we want to call out and kind of keep an eye out today. So one thing I'll do is I'll make this full screen here. I'll zoom in a little bit. And as you can tell, let me go ahead and kind of delete this other one here. All right, guys. So the areas to watch today are above this 630, this 667. I called this out in the earnings when we started popping on up. That was the extension above. That's going to be the level that we're going to look for green trades above that. So we can go ahead and just put a green line here. Let's go ahead and make it thick so you guys can see that. On the red side, what's going to be the red side indicator? Red side indicator is going to be down below 160, but I'm going to do it down towards 158. So we want to go ahead and kind of catch all these bottoms here. See when we take this out again, it's going to be around 157, 80s, 158. So I'll go ahead and I'll make that line my red line here and know that, hey, if it does get below that, we're looking for some shorts. So this is something I'm doing lately is putting a green and red line, especially in an environment where you just got to look at levels to see what happens. This is what I like to see. Qs look like they're going to hit 300. Hey, we'll see what happens, Gene. One thing I'm going to definitely be watching is to see if we can break on down there. But like always, guys, let's keep on going.
Oh, yeah.
Let's go. On the downside for the Qs, I would point out down below the 338s. Down below that, you could see some shorts coming in. Lucid yesterday was one of the best short calls that we called out. We were looking at this trade off the VWAP from the 30s. First, we were calling a move towards the 30s, but after that, we even called the move back down towards the low. This one's down towards 27, guys. This is exactly what I was looking for, and I expected this in Lucid, but I know that you Lucid dreamers out there didn't want to see this, and I'm not trying to wish you bad on anything, so let's just keep going. All right, let's go. WDC being mentioned here. Oh, Martin, I already gave you one. Let's go ahead. Let's keep going. Watermelon slice, JPM here. Not a bad look here. I would definitely pay attention to this one. I think this is a great look if it can get back on up through 150. So you'd want to see a really strong day getting up there through kind of this 50-day on the 1 hour. You look at the daily, we're trying to get back on up there. It needs to get back above 150. If not, it could take out the 140s on the downside. GS is another one that I've been watching to see if it's going to get moving. BAC looks also decent, but these really haven't started getting into the trend to show us that they want to go ahead and break out after this recent pullback. All right, so that's the banks. Let's keep going. I loaded on LTM. Hey, that's not a bad one to take a look at. Mitch, can we revisit LTM? We're going back towards 423. There you go. 2 people ask. I got you guys. Let's go ahead. Let's keep going. Lockheed Martin here. We got about 7 minutes left here before we get on over to All Access. So do me the favor, guys. Smash up that like button. Let's get it on up. Let's get the likes to – we got over 1,400 people watching. We should get the likes to 1,000. You guys heard me. Do me the favor, guys. If you guys want me to continue going through stocks, we do this every single day live for free. So do me the favor, guys. Smash that thumbs on up. If you got the iPad underneath the desk because the boss is around, pull it back out, hit that like button, and let's keep going here with the stocks. LTM, LMT, let's go. Lockheed Martin, what's it going to do? So look how my line drew out, and it came right to that level. Right around that 394.65, we actually went towards a high of 395.60. So that's the level I'd be looking for the upside. Above 395, I think he gets up there towards the 400. But you could get a little bit of a pullback on this now. Let's go ahead and take a look more at the weekly. Weekly, I've drawn out a kind of trend line that you're trying to get above here, which is the 380s. So I would think in a longer term, as long as 380s can hold, I'd still be bullish on LMT. All right, let's keep going, guys. MTTR being mentioned in the chat, and I'll also take a look at at Tesla there. So MTTR, this one's just going to keep coming on down for me. We've been talking about this one for a while now. When it was in the 23s, I thought it could get towards 10. And look, now we're at $8.45. I would definitely stay away. Tesla also breaking down hard after the earnings report yesterday. That's not a good sign. And what's a even greater sign that you don't want to be seeing is a stock avoiding to get towards the VWAP. This stock couldn't even get towards VWAP yesterday until after hours or into this pre-market hours. If you look back, this is not what you want to be seeing on Tesla. I would want to see Tesla get back above 850s today, but I'm not trading this to the upside. I'd only be trading it to the downside, at least for right now. You get what the F you deserve. Yeah, let's take a look at F, Ford. Ford is down towards 1903s. I do see a nice support here that I have drawn out. It's from the last trading period when we were in here. So we'll see if 1903s can hold now on Ford. If that doesn't hold, I do think you'll get a crack down a little further level. We'll see if Ford can grab that. One thing that I will point out in Ford, though, look at the moving average. There's very few moving averages where the 200 is actually below it. So this is essentially still in a bullish trend. We'll see what happens forward. All right, let's go ahead. Keeping my eye on the boil. Paul, we'll wish you the best of luck. We went over that one on Money Mitch, so I'll keep going here. Pfizer being mentioned in the chat. That's not a bad one to take a look at. PFE, let's take a look here. I actually have a drawn out trend line here, and I'll put an alert here for us. You know, we want to get alerted if we can get back above here, this 54.57, around the 54.50s. So let's see if we can get an alert to get through there. I do like this one. Daily is actually in the 200-day below it, so that's a good sign. Can we get above the 200-day or the 50-day, which is this yellow line? That will give us a nice little push, 54.57. This is one that I definitely keep on radar. I know a lot of people are looking at maybe some healthcare sector to do good in 2022. I would keep this one on watch. We'll see what happens. And this one can get above 54.57 today. Not a bad one to keep an eye out, Mars. AMD is another one that I'm going to go ahead and get through. We got about 3 minutes left before I get on out of here. Do me the favor, guys. I'm running through these. Hit that like button. 100 is going to be so vital for this. If it breaks 100, 93 is the next level down. And it really, I mean, you retrace this whole move here. So let's see if they can catch a bottom finally and hold on to that 100 on AMD. SDC, I kind of avoid that stock, but I'll go ahead and I'll go through it. I don't really like this stock. You can tell that it rejects every time it gets on up there. I think this is eventually a zero, but that's just my opinion, guys. What's going on, Juan? George out there. We went through Lucid already. Money Mitch buying April puts for Tesla 1100 looks like IV lower than historic. Might be worth sitting in for a while. Hey, that's not a bad approach, at least. Bros being mentioned in the chat. We're keeping an eye on it, but not right now. It's not anything you want to do. U.S. Steel had numbers today. Let's take a look how U.S. Steel did. So U.S. Steel is kind of sideways. I would literally just pull this down. Pull that down. That's going to be your go sign. Above 20s, we're going to look for upside move. And below here, this low wick, which is 1798, around 18, we're going to look for downside. This is actually one that I'll actually set an alert. I'll let you guys know on All Access if I go live on this one, if I get along on U.S. Steel. We got about 2 minutes left, so I'm going to quickly go through Netflix. I'm just going to say if it's bullish or bearish for me right now. I think you still need to get back above 400s for you to look for a long. But if you get it back above 400s, I don't think it's a bad look to like kind of risk off this 380 area, trying to get it back to fill that gap up to 500. We'll see if Netflix can ever fill that gap. All right, last one from Shannon here is going to be CVX oil trade here. Is oil finally ever going to turn around? We did get a Harmy, a topping look. This is what? At the top, this is a hangman right there. We'll see if that kind of holds 135.42s or 135.50s, or even you can point it up, let's say 136, because that's the high of yesterday. That's where you would want to trade maybe CVX towards the upside. Below here, below yesterday's low, or actually it's Thursday's low here. Yeah, it's yesterday's low, 128.96 on the downside. So below 128.96 around here, That's where I'd look for the short. We'll see if it trades out of this range. One thing that I do like is CVX. When it comes on up, it trends. And when it comes on down, it usually does a couple of down days. So we'll see if we get that down day through the 128s. And wish you the best of luck out there, Shannon. All right, let's go ahead. Shanti doing Disney. Disney's one that I would try to stay away until you really get a strong candle. Right now, it's kind of in the middle of nowhere. All right, guys, that's going to do it for me. Up next, you guys got all access. Yes, go check out some new stocks. Go learn. And if you want to trade with me, you can also jump into the chat. I'll be there trading and looking into some stocks. At around 11, I'll probably be joining in here doing a market review. So that means stick around, guys, right here on Benzinga's YouTube. Until then, guys, do me the favor before you get on out of here. Smash that thumbs on up as we do this every single day live. See you guys on All Access.